And I noticed that, especially during tax season, some of the same questions kept coming up over and over. So I figured maybe I would do some videos and answer some questions that are lingering on people's minds, especially if you own a business. And sometimes it's things you don't think about all the time, but maybe it comes up when you do your taxes, which for a number of my clients, this did. So one particular thing that I had a discussion about multiple times in the last 2 months is income versus cash. Now, most of my clients are small businesses or they're professional organizations like law firms or engineers or other professional services. So for most of those folks, cash and income are going to be very closely related, but they are not always the same. And this really blows people's minds for some reason. I guess if you're not an accountant or a CPA or you don't do taxes or bookkeeping, it's harder to understand. So I like to explain it this way. What your income is, and when we're in tax world, we're talking income isn't just money that comes in. It's usually really net income or net taxable income. So you've got your income and you've got your expenses, and what's left is your net income or it's profit. If you're having a bad year, it might be a loss, but generally it's net income. That's what we're talking about, income. Income is what is used, or net income, taxable income, net taxable income, taxable net income is what we're using to calculate your taxes. Okay? This is different from cash. Now, how are they different? How do you know which is which? Especially in a small business where they're usually very close. You can think of it this way. If you had a business that made, say you made $100 of revenue, you have one sale, it's $100 for the year, and your expenses are $25. So your net income is $75. Okay, that's straightforward. Now, if you take that $75 that your business earned and you take that cash out and you go and you put it in your own personal bank account, or you put it in your pocket, that is both your net income and it's going to be your cash distribution. So in that regard, okay, Facebook cut me off or my internet stopped. I don't know. My kids are playing video games, so it's probably a little of everything. So what I was saying before I lost my video stream is that so when your net income and your cash align, so you have that net income $75, you pull out the cash of $75, your cash and your income and your net income are going hand in hand. They're the same. But what you could also do is have a scenario where you make that same $75, so the $100 of income less the $25 of expenses at $75, and you say, I'm going to keep that $75 from my business earnings. I'm going to leave it in my business bank account. I'm not going to touch it. I'm going to leave it there, see what happens. Maybe I need it later. Now, in that case, your taxable net income is still $75. Your cash now that you've taken out is zero, but the taxable income is still $75. So that's why the cash and the income piece aren't the same. So a little bit accounting lesson I'm going to do for you. I like to explain things a little bit more visual to people so they understand. So if you've ever done this in Accounting 101, I apologize, but here, and I also apologize for my terrible handwriting. Profit and loss, or an income statement, okay? You're going to have your revenue or your sales, right? It's kind of the same-ish thing. You start with your revenue or your sales, and you subtract out expenses. And there you're going to have one of my kids walking in. That's going to be your profit, right? That's your profit. That's your net income. Same idea. It's all kind of the same. Now down here, we're going to look at a balance sheet. All right. Balance sheet is, now all these things are related, but they are different. So my little trick for remembering balance sheet is we call it an ALLO. It's asset equals liabilities plus equity. Okay? If you can read my horrendous handwriting, and I apologize, and the lighting's not so good. It's a whole bunch. Now, under assets, you're going to have things like cash, accounts receivable, which kind of gets out of the cash situation we're talking about, but that's where that goes. Fixed assets, etc. That kind of fixed assets are like computers, buildings, big things. And then the neat thing here, this is how everything relates. Your net income is actually part of equity. Okay, so that's why you can have cash and net income can be the same thing. Because if you had the 75 here, okay, it's still sitting in the bank and it equals my, my net income was 75. That's a legitimate balance sheet. 75 equals 75. If you're going to take it out, though, you're going to have 0 assets. This is if I take out my take the cash out of the business and put it to myself personally. Distribution, oh God, sorry for the handwriting again, is going to be a 75, and you're going to have the net income of 75. So one of them's negative, one's positive, just to keep things balanced. So then you've got 0 equals 0 effectively. And again, sorry for the terrible handwriting. So that's how we get to a situation where you're just having a disconnect, because in a lot of business owners' minds, the cash is the cash. It doesn't matter. But that's just not how the tax code works, not how accounting works. And a similarly related situation is phantom income. And this can be a killer for people, especially when they're not expecting it. What phantom income is if you've got a K-1, say from you're a member in an LLC or you're a partner in a partnership, at the end of the year or the following year, you'll get, for your taxes, you'll get a Form K-1. And in box 1, if you're kind of a normal business, you'll have ordinary business income. And say you get a K-1 with $10,000. That $10,000 gets added into the rest of your personal taxes on your 1040, and that becomes taxable income to you. So a lot of times what will happen is a client comes to me and they say, Beth, why do I have to pay taxes on this income? I never got any cash. So again, we're going back to the income and the cash not being in alignment, okay? Because the income on the on the Form K-1 is taxable to you regardless of what cash you took out of that business. Okay, now sometimes you have a well-managed business, a well-managed partnership, and they'll say, oh, if we're, giving you $100 is your share of income, here's $25 in cash to cover your taxes from it, or some kind of estimate like that. It doesn't always happen, but I have seen it. And that makes it a little easier for the individual owner to absorb that income into their personal taxes. So the thing to remember, don't conflate income and cash. They are two separate things. They are related, but they don't have to be. So keep that in mind. Your cash flow and your profit are not the same, okay? I'm going to try to do some more videos with some other FAQs and issues that trip up business owners and tax problems that come along. Try to get some more out relatively soon. I'm actually going to be leaving the country for a little bit, so that's exciting, but I want to get some more information out there and some more videos. Thanks.